want to thank you. You came all the way from California, been supporting us. I appreciate it. I know you got the red eye, been tired, but you made it. We're very grateful you're here. And, Jillian is an attorney doing a lot of Reggae Plus out of California. Uh, you just had a book recently. Tell us about the book, about the...
So I just wrote a book called The Crowdfunding Myth, and if you're really super interested in it, I have a copy for you. And if you're not so super interested in it, but you might get interested later and you want to buy it on Kindle, it's on Amazon.
That's great. Okay, you just saw that. That's great. And we had earlier your speak. You were the Reggae Plus panel. So and what is the relationship here right now?
So if you don't mind, I'd like to introduce Cherif.
Please.
This is Cherif Medawar, and as I've described him in the past, he's one of my favorite clients, and he was the first gentleman since the Jobs Act to come to me and say, hey, I want to do this Reggae Plus. I want to try it. I want to see what happens. And so I said, okay, let's do it. And we started from there. So Cherif, the reason why I love Cherif so much is because he will try anything. He will try anything. He's constantly thinking. He's constantly trying to come up with new ideas on how to get things done. And he is incredibly humble. Mm-hmm. But the man owns over $50 million in real estate that he's built up himself. And he builds these fabulous, he rehabs these fabulous homes in Northern California. And then this is actually a true story. A few years ago, before Cherif was even a client of mine, I was going through Old San Juan, Puerto Rico, and I lived in San Juan when I was in high school. And Old San Juan was not that great of a place. It was kind of run down. It was dangerous to walk through at night, especially if you were white. And so you just didn't go there. And when my family and I decided to go on a cruise there around 2013, 14, we were walking through there, and I said to my husband, this place is totally different. It's like a bunch of money was poured into here, and this whole place has been rehabbed, only to come to find out all of that work was done by this guy right here. So he owns pretty much half of Old San Juan and has some great tenants there. And so he came to me and said, let's do a Reggae Plus. And I want to buy everything, Jillian. So
her background is finance, so she's like, okay, we'll test everything.
But you have a good organization too. I've been talking to Ashley, and the one is just. What's up? I mean, if I may, I'm going to leave the whole floor to you guys. So explain about the workshop. What has been your secret? And you've been looking at the outside of the crowdfunding, and obviously you have a new brand, Crowdfund Express. What have you been, and what do you see? How come it makes very sense that you guys come to the crowdfunding, the crowd space, as my friend Steve Sinelli called it.
Yes. Well, it's been always the space for the accredited investors, private fund accredited investors, qualifying the people, etc. So it was kind of limited. And since I'm in the education business, I was training people. I was showing them, here's what I do. You can go out there and do the same thing. Here are the steps for commercial buildings, residential, high-end rehab, etc. And when I heard about the Reggae Plus, I had a conversation with Jillian, and she was so clear on the benefits of the non-accredited qualified, if you will, that I was instantly sold, knowing that she says I'm very creative and all this, but she's also up for a challenge, which is really exciting. So I can throw ideas off of her, and she understands the finance and the legal part. So that's when I saw that there is huge potential with it. And from the Reggae Plus, there was potential to have my own crowd fund where I can house other funds as well, etc.
All right. Well, in that notion, thank you. The floor is yours. I appreciate you being here. You came all the way here. We're looking forward to your workshop. Let us know how you've been successful, where you go from. Take it away. Thank you.
Thank you.
You're very welcome. So one of the things Cherif came to me with was, actually, let me ask you, what was one of your biggest concerns when you came to me and said, I want to do a Reggae Plus? Besides the fact that you said, look, I have a lot of students. Cherif also runs an education company where he teaches about real estate. And you have a lot of students who want to invest. And tell me about those students.
Okay, well, actually, Joel said it best. My concern was, how are we going to handle the non-accredited investors? Are they going to be complaining? Are they going to need to get out in a shorter period of time than I'm allowed to do within the offering I have? And when I started talking to investors about what their goals are, those that couldn't invest as accredited, I found out there is a lot of retirement money, which Jim Jones and Dara Albright had talked about, and there was that patient money that I can go after that I couldn't before. Number one. Number two, the accredited will still be interested based on the deal, the developer, and the market.
Now, you kind of also figured out halfway through the process, or not even before we submitted to the SEC, but before we were, but while we were still kind of putting all the pieces together, you came to me and said, Jillian, I want liquidity.
Yes.
So that is one thing that Reg A has. So what is your plan with the liquidity, and what are you going to do regarding liquidity for your investors?
Okay, so the liquidity is always an issue for any investor. Those that want out, they want out. And if you offer them liquidity, I think somebody said it earlier, you can pay a little bit less, and the offering becomes more desirable. So what I did is I put in the offering, we put that I can buy back the shares. Anybody want to cash out, I as the sponsor can buy back shares. I always keep cash reserves, so that's always a good solution. Number one. Number two, with the Reg A Plus, correct me if I'm wrong, they can also sell the shares.
Right. So yeah, you can have free trading shares. So one thing we built into Cherif's offering is that we gave him the option. He is not yet listed on the OTC. As a matter of fact, even though we cleared comments like 2 months ago with the SEC, Cherif's not yet qualified, and there's good reason for that, because the minute Cherif gets qualified, his clock starts ticking on how long he can raise the capital under his deal. So even though Cherif, we cleared comments, like I said, 2 months ago. If you went to the SEC's website, you're not going to see a qualification there, because we're purposefully delaying the qualification so that Cherif can do it the right way. He can make a big splash instead of just kind of slowly going out and not making much of an impression. So he'll make when he goes out to start raising money, he'll make a big announcement. And then after he's done raising the money, the idea is to get listed on an OTC, QX, or QB, a smaller bulletin board exchange where his investors can go and freely trade their stock.
Exactly.
Yes. So, Cherif, tell us what you're going to invest in.
Well, we're going to invest in commercial properties, mixed use, but specifically hotels. I have a lot of background in hotels. I always feel hotels are the best improvement on a land, if you will, because you can be selling condo hotels, residential. You can be subleasing areas like the restaurant area, the gift shops, etc. You can do timeshare. I have a property right now I bought for $4 million. It instantly got the approval for timeshare. It goes in value to $11.7 million. I haven't even started the process, and I'm having offer. It's just, you can do so much with hotels. So that's really going to be one of the big focuses.
You're making me want to invest. I'm like, wow, I didn't know all that. All that.
All right, I have
awesome
a subscription
stuff.
agreement in the.
Yeah. Hey, not yet qualified. Calm it down. Calm it down. Yeah. So another thing, just as a tip, if you're going to go out and do a Reg A Plus, one thing I said to Cherif was when we started the process. So to give you a little bit of my background, I've been doing Reg A's since 2008. So for a long time, and before the Jobs Act, and back then they were very difficult to do. They were almost, quite frankly, they were almost impossible to do. You had to really plan 6 to 12 months to get one done, for sure. I had offerings back before the Jobs Act that were literally approved at 9 a.m. and then the approval was redacted at 2 p.m. Like the SEC would call me and say, "You've cleared comments, you're good to go. Go ahead and start raising money." And at 2 p.m. call me and say, "We changed our mind. We want one more thing changed." And that was a very bad day. Anyhow, with that being said, I did kind of have this moment with Cherif where I explained to him, since he was our first post-Jobs Act offering, look, I don't know how this is going to go. It could go very badly, and here are things that could happen. And so what we decided to do was, there's 3 ways you can submit a Regulation A. You can do the Form 1A, which is the way it states right there in the Form 1A if you're going to go file a Regulation A. Or you could submit an S1 registration statement, which is for all public companies that are not real estate related. or you can submit an S11 registration statement, which is for all public companies that are real estate related. And I said to Cherif, I'm going to try this. This is what we're going to do. I'm going to submit an S11. I'm going to give them full-blown disclosure as opposed to the Form 1A offering circular. Here's why. It's what the SEC is familiar with seeing. The Form 1A is a brand new form, doesn't give as much disclosure. The Form S11 is much more. They're familiar with seeing it. You know, they get them every day, that kind of thing. So we decided to go with a Form S11. And then I said, you're probably going to get about 45 comments on the first go around. And we got so lucky. And I do believe, and the reason why I'm driving this point home is because of this. We only got 18 or 19 comments on the first go around. We only ended up going through 2 to 3 rounds of comments. So it was really fast. It was way faster than we expected. And because of that, I really honestly believe it was because we did that Form S11. So if any of you are out there considering doing a Reg A, if I can give you any advice, do it that way. Because I've had great success with that. Stephen.
How much money does that cost as compared to 1A, right? Because the S11's got a lot more going on.
I don't charge anything different. I won't do a 1A. I'll only do an S11 or an S1 registration statement. Personally, I mean, I don't want to speak for other attorneys, but I don't care if you're raising $1 million or $50 million in a Reg A, I charge the same price for everyone. It's a flat fee. It's $50,000. I'll just tell you what it is. I don't care. Yes.
So what you're saying is you don't file a 1A, you file an S1?
I file on the Form 1A, and I start saying I'm filing the Form S11 on a Form 1A, and then I use the format of an S11 or an S1. So now you all know my dirty secrets, and it's being recorded.
1A gives you the exemption of the states, right?
It has nothing to do with that. It has to do if you're doing Tier 1 or Tier 2. So we went and got Cherif an audit, and if you want to talk about your audit experience?
Yeah, actually, Jillian helped me with that in terms of getting the right audit firm, and they're really good. They were fast for me. You know, speed is very important, I guess, for everybody, right? And we got the right firm, and they had to look at a lot of details in terms of the properties I've had. And I have a fund that did a lot of deals, maybe 200 million in deals. So I had to explain a lot of things about when I bought a property, how much in investment we put in to rehab it, and when we sold it, the other properties that I'm holding personally in my portfolio, how much I bought them for, what did I do, and how do I come up with the value of these properties worth $7 million in my portfolio? Give us and Jillian helped me a lot in that process. So
yeah. So now tell me about CrowdFund Express, and what you're planning on doing with your Reg A, with other offerings. Where's the next step for United Group Fund?
So the Reg A Plus is called United Group Fund. That's the Reg A Plus. But before that, in 2009, I set up a fund, a Reg D 506B. And through the education company, what happened is I was doing an event at the San Mateo Marriott next to San Francisco Airport. And one of the students, one of the investors sitting in the room raised his hand and he said, okay, Cherif, it's fine and dandy. I got the project, how you made money on this one. I can't take that risk. If I make a mistake, I'll get a divorce. Why don't I just give you the money and you do it? So I didn't know what he meant. So jokingly, I threw it back at the audience. I said, okay, how many people would just give me the money and I'll invest it for you? Well, they all raised their hands. That's when I said, oh my gosh, I got to go file a Reg D 506. And the B was the only one available with the established relationship. The Reg D 506B is you solicit when you have an existing relationship with the clients, and you cannot publicly advertise. There's all these rules that the attorney will tell you. You follow this, you'll be okay. And I thought I was going to raise $5 million. We raised a lot more, a lot faster. And so that fund is still up and running. And then when the Reg D 506C came out, which is you can publicly advertise, but you take money only from accredited investors, that was a no-brainer. You know, I just want to publicly advertise now to tell people about what I'm doing. So we rolled that one out. And then the Reg A Plus came, and I talked to Jillian. That was 15-minute conversation. I was sold. First of all, she is the right person. She has experience in the Reg A from the past when it was excruciating to roll one out. And she understood the business model. She knows real estate. She's very familiar with that. So we did that. So then I realized, wait a minute, if I have a Reg D 506B, I have a C, I have a Reg A Plus, why don't I have my own platform? I also have a database of 250,000 students. 25,000 of them are accredited investors that opt in constantly. Whatever event I do, they show up and webinars. So I said, okay, I'll launch my own CrowdFund Express website. And actually, the latest conversation was just yesterday. I was texting her, and she responded right away, and she said, okay, let's go ahead and file with FINRA, etc. So that allows me to have the exposure to the world out there. And maybe you can explain why my Reg A+, you filed it, even though I have the right for 50,000, you can explain why we filed for 25 million.
Oh, that's right.
Million.
So, like, one of the things I explained to Cherif and I explained to a lot of my clients, like I have Reg A's in the hopper right now from anywhere from $2 million to $50 million. So literally I have a Reg A plus that's filed right now for as little as $2 million. But, you know, I had a moment with Cherif where I said, are you really going to raise $50 million in 12 months? And he said, I could. I said, does it really look good to your investors if, let's say, you say I'm going to raise 50 and you only raise 20? No. It looks a lot better if you say, I'm going to raise 25 million and I have subscriptions for 26. It's good from a marketing point of view. It's good from an investor morale point of view. So I always think, you know, you can. The other thing is too is the Form 1A, the Reg A's are at market price, right? You know, some of the bigger funds like Fundrise or Rich Uncles, they have started putting in NAV, net asset value type valuations into their pricing models for their stock or for their units or whatever they're selling. So they start at one price, they value the assets in the following quarter, and then they value the stock again, so on and so forth. However, the SEC with the little guys, generally speaking, and I know from experience, does not allow this. Doesn't allow fluctuations in price for stock. They require fixed price for stock or interest in an LLC or what have you. So what I said to Cherif is, as you're selling units or stock in your company and then buying properties, you're adding value. So if I buy in halfway through the year and you've already bought 3 assets, the guy before me had a higher risk and bought that stock at the same price. So my thought was to him is raise as much money as you can in this fund, buy the assets you want and close the fund out and start another one. And that way you're keeping a consistency, or at least you're trying to keep control and consistency on the value of the stock so that everybody's kind of getting in. Not everybody's going to get in at the same deal, but kind of everybody's getting in at the same price or deal because the SEC is forcing that fixed price issue. So that was one reason. And then the other reason, of course, was the marketing part. Cherif doesn't want to go out there and say, I have a fund for 50 and I was only able to raise 20. To me, it's very impressive when Cherif says, I had a fund for 5 million and then I got $11 million. That's great. That's amazing. So, and that's kind of the message you want to be sending. And that's not really a legal message, but a marketing message.
Yeah, so we rolled it out at 25 million, which I'm very comfortable and feeling that the minute we get the, she's asking me when I can do it, and I'm going to say, okay, we're going to launch somewhere in the next couple of weeks, and we're going to say, okay, we're ready to go. And then she will do all the legal part that's the final stage. I don't know what it's called.
It's just a letter you sent to the SEC saying, could you please give me my qualification letter as of this date and time, essentially.
And we'll be able to raise the money very quickly. I have already everything lined up. And then we'll shut it down. And the next step will be going OTC.
Right.
And so I think everything that was a vision a few months ago is becoming a reality very quickly, thanks to Obama's Job Act and the SEC reacting to it, and Jillian putting the pieces together.
Oh,
so,
thank you.
Thank you.
So does anybody have any questions before we wrap up here? Because I don't think we have a ton of time. No? Nobody has any questions at all? Even a little bit?
There's a question that is behind it.
Do you recommend the clients that they do Reg A rather than Reg A Plus as a rule?
Oh, okay. So I'm sorry I can't see you, so I'm just going to talk this way. So there's 2 Reg A's. There's Tier 1 and Tier 2. And Tier 1 is for $20 million, no audited financial statements. And and you have to get blue skied in every state. And then tier 2 is up to $50 million audited financial statements, ongoing reporting requirements, no blue skying in all 50 states. I don't allow my clients, for the most part, to do tier 1. I strongly discourage it, as a matter of fact. And the reason being is because that blue skying, that will kill a deal. I will tell you the states that will kill the deal. So so you don't want your deal to get killed, and if you don't want your deal to get killed, spend the $2,500 on getting the audit. You know, that's what it costs for a brand new company. So if you're starting a fund, it's $2,500 to get an audit done. If you have an existing company, then it's going to be a little more expensive. But I'm going to tell you right now, that audit will be so worth it. It will be worth every single penny. And as far as ongoing reporting requirements are concerned, I can't speak for other attorneys, but we include in our flat fee price 1 year of reporting requirements. I'll help you with those for the first year for free. And quite frankly, no attorney's going to charge you an arm and a leg for those ongoing reporting requirements because they're not that burdensome. They're definitely less burdensome than a full-blown reporting public company. So do the tier 2. If I could, so where do my dirty secrets? Tier 2 only, and do it on an S1 or S11 form. And don't, and here's the third one, and don't try to raise more money than you can actually raise.
So Form 1A is a bust in your view?
It's not a bust, it's not, I prefer to do the full disclosure, that's all.
It's new, right?
Yeah, it's new.
Your issue is that it won't be new for long.
Right. It just, I believe it's going to give you the exposure from, this is my belief, this is my humble opinion. I believe it gives you more exposure for comments and more exposure for risk because you didn't make all of the disclosures that you could have made under an S1 or an S11.
Cherif, what was your price tag roughly on your audit? It sounds painful.
Because it was a new company, it was around $2,500.
New company, but what about all the questions about your real estate and all that?
Yeah, that was with actually the SEC comments, etc.
Yeah, so we did a prior performance table. And so what really happened with the prior performance table is that the SEC paid very particular attention to that. If we claimed something was worth $27 million, they wanted to know to the penny how we came down to that number. So quite frankly, we would have only gone through 2 rounds of comments if it wasn't for that damn prior performance table. That was what really, the third comment letter had everything to do with that and making sure what was reflected in that prior performance table was absolutely accurate. And was there right? Actually, I have to hand it to the SEC. They found a massive miscalculation within the prior performance table, and that third comment letter, we were able to fix it and get it out there. So.
I'm sorry.
Yes.
On Form 1A, you get fewer comments than you would on S1 and S11?
No, I'm saying a Form 1A, you could potentially get more comments. Yeah, from the SEC. So you know what? I'm going to keep talking this way because I keep leaning back and I'm just hurting myself.
The microphone for the camera. Good. Any other questions?
No?
All right.
All right. Thank you.
Thank you.